Okay, hello everybody, and thank you for joining us and your patience while we start the webinar, which will be about the benefits of investing in a Spanish compliant bond today. I won't bore you with a long introduction. My name is Matt Penfold and have Paul Correa here as well. We're both from Fiduciary Wealth Management. So if you want to know more about us, visit our website, fiduciarywealth.gi. You can review our independent reviews on Trustpilot. Visit our page on YouTube. So search for Fiduciary Wealth on YouTube. There's a host of content on there for free that we offer up. Past webinars we've done. There'll be future webinars. And we run a weekly podcast, the Money and Finance for Expats podcast. We discuss everything and anything related to finance for expats. So subscribe to our YouTube channel and you'll be able to get access to that. And we'd love you to join our podcast community. So we look forward to seeing you all there. But for today, we will be talking about the Spanish compliant bonds. And firstly, I'll run through a few technical details about what it is, how it works, and then I'm going to pass on to Paul. And really the real reason for today's webinar, we're launching a new market leading offer for the Spanish bond. And I know Paul's very excited to tell everybody about this. So yeah, we'll get started with the webinar.
Matt, can I just interject for a second here and just say something very quickly?
Of course, yeah.
For the benefit of the many listeners. I mean, even though this webinar is dedicated to the Spanish bond, as you know full well, as a practice, as a financial advisory practice, we're not in love with a product or the product. We're completely agnostic when it comes to what structure we put in place to achieve the client's goals based on their pains and their fears, their goals, dreams, and aspirations. So neutral. And, you know, our business is all about focusing on the client experience and the service and the value that we can embed. And more importantly, that we can deliver the outcome that people want. So the product is just a vehicle. And even though it's on the Spanish bond, and I think both of us are reluctant to do product specific webinars on the basis it looks like we are pushing one product, we're not. You know, we could engage in a discussion with a prospect. And then after listening to the requirements and the needs, you know, the outcome might be that the Spanish bond is not the perfect fit. I know a lot of our competitors drive the one product and start the conversation knowing that at the end, that's what you get. Let me be clear. We're making this special offer, but we're not in love with the product. It is not the only product, and it might not even be the right product. So I just want to caveat the webinar so everyone is clear that we're not pushing the Spanish bond as the only outcome. We're not.
Perfect. No, thank you, Paul. It's completely right. You know, we're not pushing this. We want to assess people. A Spanish bond might be right for you. It might not be right for you. It might be used as a combination of your financial planning. So today we're going to tell you all the details, and then we're more than happy to have an in-depth conversation with an individual who, if you think the Spanish bond or something else might be interested in, you're an expat who's looking for some financial advice, that's what we're here for. So great. So one more thing to add as well, we're more than happy to take questions at the end of the webinar. There's a function on Zoom at the bottom, the Q&A function. So feel free to submit your questions. We will get to all those at the end. That can be about the Spanish compliant bond or ourselves. I'm more than happy to answer those. So what is a Spanish compliant bond? So the technical description is it's a single premium investment linked assurance policy that meets a number of conditions to be deemed tax compliant in Spain. What does that actually mean? So In the UK, we're used to investment wrappers, ISAs, UK bonds, those sort of things. In Spain, for those of you already in Spain, you probably know that financial services, the financial industry is a lot less sophisticated than we're used to in the UK. And generally Spanish people, you know, they tend to go to their bank. They have their friend, their, you know, someone they know and who works there, and you know, they invest their money in a low paying interest rate. So this product was specifically set up for expats and is available for expats only. And the way it works is it's so a single premium investment. What that means is you invest a lump sum. You can contribute regular investments, though there is a minimum that you can do that, but it's generally for a lump sum to invest in the Spanish compliant bonds, and then the bond acts as a wrapper around the assets held within that. And one of the key features of this, which I will get to shortly, is there's no tax until you make a withdrawal on the bond. So talking of what are the key benefits? What I kind of alluded to there, it's capital gains tax deferral. So while the assets remained in the bond, there's no tax for you to pay. Normally in Spain, there would be your annual taxation you would have to pay on that. That's not the case here, only if you access the funds within that. And as part of the compliance element of the bond, it's exempt from the modular 720 reporting. And to go back to the taxation point of it, so your tax on the withdrawals is calculated for you and paid directly to Hacienda. So in Spain, we all have to do our annual declaration to Hacienda. We declare and we pay the taxes owed. You don't have to do that with the Spanish compliant bond. If you make a withdrawal, the bond provider can calculate the element of tax you need to pay on that. They pay that to Hacienda for you, and then the net result comes to you. Now, as part of that calculation, they work out the proportional tax relief for the withdrawals, because only the gain element of the withdrawal is taxed. And I will demonstrate shortly. We have a little bit of a visual demonstration. Actually, let me see if I can bring that up now, and we can kind of demonstrate exactly how that works. So here are the capital gains tax rates in Spain. So fairly simple, and it depends on the amount of gain you make in a particular year. So that's just for a general investments you may hold, anything related to capital gains. With the Spanish compliant bond, as we say, it's you're only paying tax on the gain element of the withdrawal. So if we look at this diagram here, you invest, very simple figures here, 100,000 euros. It grows in value to 150, and at some point you're looking to take a surrender value of 15,000 euros. So out of that 150, 50 of that is gain, or a third of it is in gain. So you take the surrender, you of 15,000 euros, and the bond provider can work out very simply in that case 10,000 of that is return of capital, 5,000 of that is the gain. So only the gain element is subject to the tax. In this situation, it's 19%, as we saw in the tables previously. So that calculates the tax withheld is 950 euros, and you are paying an effective tax rate, thanks to that calculation, of just 6.3%. That 950 euros is paid directly to Hacienda. So it's nice and simple from a kind of administrative point of view. It's very tax efficient as well for you, and that can be managed very well. Now back to the benefits. The policy can be written in joint names. Okay, there's two good reasons for that. Firstly, it avoids going through the Spanish probate system, which can be lengthy and costly. But also there's no tax liability on the first death. So you said it in joint names. We don't want to talk about this, but it happens in life. The first dies, and this can be passed on to the remaining survivor, likely your spouse, who can then just continue with the bond. Now then, if the ultimate beneficiaries are non-Spanish tax residents, you have family in the UK beyond, because the bond is held outside of the Spain, and therefore the beneficiary be outside of Spain, then there's no Spanish succession tax related to that inheritance. Within the bond, so the bond acts as a tax wrapper around the asset. So there's a wide range of funds that can be invested within the bond. These do need to be regulated, what they call UCITS funds. UCITS is a benchmark for kind of European regulated funds. So they need to be qualifying funds to be held within the bond. And the bond could be held in a range of different currencies. So sterling, euro, USD. Generally, it's our recommendation that any investment should be held in your base currency, which is generally how you generate and spend your money, which if you've got a Spanish compliant bond, you'll be living in Spain. So generally it should be held in euros. So whereas you may have assets still in the UK, which are in sterling, the bond can be aligned so you are cancelling any kind of currency risk as that fluctuates. And the final key benefit, and I think this one's really important actually because of what we've seen of late, what's happening in the US with the banks, is there's consumer protection. So the assets are segregated, yours from any other investment within that bond. So they're segregated in your name only. So for example, if there is an issue with a bond provider, there's liquidity issues, those assets are segregated in your name itself, so they're protected for you. So we can see there's the key benefits and how they can solve numerous issues for you. You know, it helps from reporting, taxation, succession tax. You can align it with your base currency, which is likely euros. Protection of the assets. We say how important is that. So it's really, this bond has been created with expats in mind and really to solve a problem. Not the only solution, as Paul said at the start, but somebody living in Spain and wants to structure their assets correctly, the Spanish compliant bond is an option for you. So that is a bond. That's the boring part, which I had the pleasure of delivering. But the main purpose of this webinar is to launch our new offering. It's an exceptional, it's an unbeatable offer, which we've been planning this for a while, and we thought we're mad to do this because there's so much value, but we're very excited to release it. And Paul, you're going to tell us more about that?
Absolutely. I mean, firstly, Matt, thank you for the explanation of the structure and the benefits and the tax calculations for the bond. But you're right. I mean, we focus strictly on one market, and that is the Iberian Peninsula, be it Spain, Portugal, or Gibraltar. So that has, and it's only British experts that we serve. So we're very focused in terms of our niche and the type of clients that we provide value to. And yeah, our business is all about, as I said, solving client problems and providing the ideal solution, which I repeat again, and I'm sorry for the listeners, the Spanish bond might not be the solution, but it is an irresistible offer. And on top of that, we are embedding and over-delivering. So that's really important to stress again. But we're really passionate about positively shaping the wealth of the British expatriate community in Spain through tax-led wealth management advice. We sincerely want to help and improve the lives of the expat community in Spain that we are so proud and privileged to serve. As you know, Matt, we're not a financial supermarket churning out products off the shelf. That's not us, and certainly we're not the type of how to say corner shop. We only have one product, yeah, whatever you want, but it's a Spanish bond. Our advice is individually tailored for every single client. We treat each client as an individual, and we are perfectly attuned to the exact needs and wants. So we started this process with a bit of introspection, looking at client needs and working backwards, and then trying to put every ounce of energy into creating a whole solution, because we honestly deeply care about the end product, the outcome, and we are very confident that we can provide considerable added value. I think the British expatriate community in Spain, and quite rightly so, very uneasy trusting anyone because of the background and the history. There's been a lot of scams, Matt, and you know, what can I say? I mean, we are born out of a law firm established in 1892 in Gibraltar. So reputational risk is everything. We've been in business for 15, 16 years, serving the British expatriate community in Spain. We have an untouchable record in terms of our integrity and our dedication to service, which we are proud of. We are quite singular as a financial service advisory practice in that not only do we have those legal roots, but equally we are part of a global accounting network, MGI, which has its roots in Weybridge in Surrey, but today is, funnily enough, this morning I saw a post on LinkedIn. MGI is ranked now as an accounting network globally 17th in terms of size. So we are, for financial advisory practice, to have legal and accountancy roots, I think shows a lot of the kind of firm we are, the integrity we have. As I said, we are providing a premium product for a lower price. So a massively improved version of the old Spanish bond. We've integrated key additional benefits to create a superior product, which is recognizably better than anything else in the marketplace. Again, with a caveat that the Spanish bond might not be the solution. So we've aptly termed the bond the Alpha Star Collection, because we are providing, alpha in investment returns means providing excess returns to the market. And we call it alpha because we generally believe that we are providing significantly more value by bundling a package of services for discounted price. So yes, you are correct, Matt. It's delivering more for less. So we are trying to also eliminate all the complexity to make the product simpler, easier to use, while reducing the establishment cost by half. In fact, we're already one of the cheapest, and our pricing is transparent, exactly the same as you would get in the UK, where you have your terms of business and it's fee-based rather than commission-based. So everything is very clear. It's an insane product. And it's an insane offer because it's unmatched in the marketplace, and we really care that what we deliver is different and better. So yeah, we want to do things better for the community at large in a very specific and concrete way, something that will be appreciated and will be remembered for. The business is not just about profits, Matt. It's about our stakeholders, whether it's our staff, whether it's our suppliers, and certainly whether it's clients. It's all, business is a spiritual game. It's about embedding value and giving something back to the community. And that has been our ethos all along and our values. Perhaps we have not been that good at communicating what we stand for. But no, it enables the client also, because we're giving those added benefits to learn more about their overall financial situation, and then we can help them protect and defend their wealth from an overseller's taxman. I think from history, the British expatriate community have three basic needs, Matt. To sustain their lifestyle in retirement is always top of the list in my experience. Then how can I preserve and transfer my wealth to my heirs? And thirdly, and less importantly, but it does come up constantly in conversation, is if I have sufficient do I have sufficient financial resources to cover end of life care costs if I return back to UK? And how would that all work? So yeah, going to the product itself. So what are we offering? And what do others offer? So if you search around, you will find that a lot of the IFA practices promise that there's no establishment fee to establish a Spanish bond. Yeah, it's completely free. And as you know, there's no such thing as a free lunch. That is simply untrue. You may have been sold that story, but let me tell you how this really works. The IFA will establish a Spanish bond for you with an early encashment period of up to 7 years. So they'll say, yeah, no fees, but then you're tied for 7 years. So what are the implications when you sign on the dotted line on your terms of business with a Spanish bond and you're tied for 7 years with early encashment charges? There will be a tick on the box. So basically what it means is that the IFA will take the maximum available commission possible under the terms of the Spanish bond, which, Matt, you know very well, could be as much as 7, and in some cases could be as much as 10, depending how they invest how they invest the money. So someone has to pay for the service, right? There's nothing is for free. So the way it works in practice is that the bond provider recovers the commission, because if you're charged through early encashment charges, it means you set up the bond, the company setting up the bond, which now there's only one provider, sadly, that's Atmost, they will pay the commission up front to the advisor. So they say, Mr. Advisory Firm, here's your 7% commission up front. The advisor pockets the money immediately. It doesn't show in the expenses and costs. That's why, oh, there's no charges. It's just the insurance company charges. But that's not true, as you know, Matt. So the way it works, because there's early encashment charges, and Atmos have paid the advisory firm their commission in full on day one. So their pockets are full of commission, and they may have not disclosed it to the unsuspecting client. Then what happens is that the policy has to deduct the charges from the client over the early encashment period. So over those 7 years, or whatever the encashment period is, they are deducting additional fees to cover the commission they've paid the IFA firm, right? Because they have to recover it. Atmos is not going to pay the advisory firm and they're out of pocket, right? Someone has to pay for it. So who pays for it, Matt? The client.
Of course.
And the fact that it says 0 doesn't mean that you're not charged. So you will be charged over 7 years additional fees, so that those commissions that Atmos paid to the advisory firm have been recovered. If you decide to surrender the policy during the early encashment period, which can happen, it's never recommended that you do, but it can happen, then any outstanding charges and commissions which the advisory firm have pocketed and which haven't been recovered and recouped by Atmos, they then become immediately payable to Atmos when you encash the policy. And that is the secret, the dirty secret, I call it, of using early encashment charges, which we are dead against, because I think it lacks transparency and it's just to disguise and mask and confuse the client for a large commission payment, which frankly, a commodity like a Spanish bond shouldn't have an upfront fee of 7% or 10% for that matter. Quite clever, isn't it, Matt?
Yeah, absolutely. Yeah. Yeah. And very well hidden, which is why people are very unsuspecting.
Exactly. And in fairness, not all firms are the same. And some will charge an explicit establishment fee with no early encashment fees, no question. There's some firms with integrity out in the marketplace in Spain. But even then, it's not uncommon for the establishment fee to be 3%, sometimes 2%. And for a very large investment, yeah, it could be a bit less. But you know, the commissions are still high, but not as high as the scam of using the early encashment charge mechanism, which I think is, yeah, should never be allowed. So what is our price offer? So basically, we would establish a bond for just 1%, which is payable in advance. Because I think the bond is a structure and a commodity, and we need to do the paperwork. And yes, it takes time to set up. It's costly and it uses up our time and resources. But we're not really embedding value because the bond has the tax structure in place where embed value is managing the assets, but more importantly, looking holistically at the client situation and finding out how can we deliver the best possible outcome. And there's a lot of different angles you need to look at and consider. So we are not charging really an establishment fee for creating the Spanish bond. We are doing it at 0, but we charge up front because there's work involved. And yes, the Spanish bond has some compelling tax benefits. It could, for the right client, it could be the right product. But as I said, it doesn't take into account the full picture and the client's overall financial and tax position, because as you know, it's different for every client. Not all clients are the same. And I repeat, for us, it's all about, you know, in that early engagement with a client, finding out what are the biggest pains, the biggest fears, the biggest obstacles, the biggest worries. And then at the same time, let the client dream and tell us what are the biggest aspirations and goals. And then having that conversation, understanding the overall situation, and then embedding the value. So what we want to give is the added value, that individually tailored advice. So how can we do that? Well, it's very simple. We do cash flow simulation analysis, cash flow analysis report, because I think one of the key questions we keep being asked is, do I have sufficient capital to ensure I sustain my lifestyle in retirement? And if the answer is yes, how much can I draw from my investment? And that is quite a logical thing to ask at the beginning. But you know, there is a scientific way of establishing whether your money can run out or whether you're living within your means or beyond your means. And what we do is we look at simulation analysis is looking at variables like what is the tax rate? Because it's not just the amount that you draw from the Spanish bond, but what is the amount after tax? What is the inflation rate? Very high, as we know today. It might go back to 2%, who knows, sometime in the future. How much is the rate of return in the market? How much are you drawing? And any other consideration. And we run different simulations to try to establish, on a best case, your money will last you for 30 years. On a base case, on the probably the most likely scenario, it will last you for 25 years. And on the worst case, it lasts you 20. It's not exact, but it gives an individual an indication of how much they can spend. So whether you opt for the Spanish bond or some other structure that we provide that cash flow analysis as part of the service, which no one does. Then we look at ensuring that there is an orderly UK exit, because you are subject and impacted by the UK State Residency Test 2013. We need to look at the ties you have with the UK. We need to look how many days you go back. We need to look at when you exit the UK. I think that is well and truly embedding value. Then we review your UK domicile and assess whether you have any potential liability to UK inheritance tax. And if you're UK domiciled, then in all likelihood you have to protect against that eventuality. And we've got tax mitigation options to do that. Because, Matt, as you know, there's a double taxation treaty between Spain and the UK, which covers different sources of income, but is silent on the issue of inheritance tax. So potentially you're subject to inheritance tax in Spain based on succession tax in Spain. Again, depending on the region you're in Andalusia, thankfully, the amounts are very low, almost non-existent, but certainly you will be caught up by a UK domicile and UK inheritance tax. How do you protect from both sides? That's a really important issue to consider, because you might want to pass on your legacy to your children in a tax efficient way. You might decide to go back to UK through ill health, which is quite common, or the passing of a spouse, and you go back and you have to restructure your financial affairs so they're tax compliant in the UK, and again, to reduce the tax burden should you go back to UK. So UK domicile, very important, and is worth dedicating time and effort to protect that. And whether it's a Spanish bond and another vehicle, the question is, how do you limit that liability so you can pass on as much as you can? Because inheritance tax is almost a voluntary tax if you plan correctly. Then we deliver a very comprehensive pre-arrival or just arrived tax planning strategy report covering all the relevant issues, whether it's tax, financial, retirement. We look at every angle based on the individual, and then we have we after having engaged and got all the information, we produce the report and then further engage and have further discussions to make sure that nothing has been overlooked. As you know, Matt, the devil is always in the detail. And so we do that. And then we also consider and provide advice on the timing of the sale of your UK main residence to secure UK capital gains tax exemptions, because you've got capital gains tax exemptions on your main residence if you're a UK tax resident. Once you move your tax residency to Spain, those exemptions are diluted over time. So again, how do we time it so you maximize those exemptions to pay the minimal tax? Because that's where the value is, paying minimal tax. So we're very excited we can do that. Then the other thing that we do is Matt, and we've got this personal finance portal app, which we give to clients free. They can access from anywhere at any time using any device, and they can have all their financial information there, including UK properties. I mean, it's linked to Supla. It updates the value on the app. I think it's fantastic, incredible app. And it's not just any investments they hold with us, but they can use it more widely, to look at their net worth. And we can offer this for minimum investments of 250,000. And if it's a low amount, of course, we would be competitive, but it will be probably a bit higher than 1%. So what we've done, in essence, is we've reduced the price from 7 to 1, or let's say for the good practices that charge you 2, we've got 1. We've undercut all that to the bone. I mean, this is going to put a huge strain on our practice, as you know, but we're going to do it. We've committed and we're going to do it. So we reduce it to 1, and then additionally, we add all these value-added reports and services and discussions and cash flow simulations to really embed value, because ultimately, as I see the Spanish bond, when someone, an advisory firm, I use the word advisory sparingly, because if you're an advisor, you have to look at giving holistic and individually tailored advice. For me, it's like going to a sweet shop and getting whatever. A Spanish bond is a commodity. The value doesn't lie in the product alone. The value lies in everything you do around that product. Matt, I can't stress it enough. We genuinely care. We're passionate about serving the British expatriate community in this part of the world, whom we are a part of, and that's why we've decided to offer this to those who want to take advantage of the offer. As I said, huge strain, and I hope we can cope with the volume. But look, after engaging with the client, the decision might be no. The Spanish bond is not necessarily the only product or the best product. we are not in love with any product. We couldn't care less what the product is, because I don't think that's in the client's best interest. You can't have engaged in a conversation with a client and at the back of your mind, just waiting for the opportunity for a pause to then say, I know what the product is, the Spanish bond. How can you be an advisor then? Where are you embedding value? You know, all roads lead to Rome mentality. I don't think that. I think we do a great disservice. And quite rightly, the British expatriate community in Spain, there's a trust issue that can only be broken by acting, you know, in a spirited, with great integrity and genuinely wanting to help people, rather than what's in it for me, which is completely wrong. Something we've been against, and now we're going out into the marketplace and explaining this.
No, absolutely. And we talk about this in our podcast a lot for those who've seen that, but really and truly, we want to work with expats. We're not working for us. We're working for you, hand in hand to find the right solution. But no, I mean, the offer, I call it the madness offer, Paul, you know, because I remember we looked at it and said, right, should we lower the cost? Should we add more value? And what we've done is done both. And yeah, it's an amazing offer, and how long we can keep that going for, time will tell, but is there available. So anybody interested in that, they should reach out to us, and we have a conversation to see if the Spanish bond or something else is suitable for you.
And if something is suitable to protect their tax position, and for whatever reasons, less tax, more efficiency in succession, in passing their legacy, whatever it is, if there's another solution or a combination of both, we will maintain the same price. Because as I said, we're not enamored with the Spanish bond. We just want to make sure that we're doing the right thing, and that's all. The rest is immaterial to us.
Absolutely. So it kind of leads on nicely, and we've covered some of this, but people ask us, right, under what circumstances should they not use a bond? So I think the first one is not necessarily not use it, but if you contact someone, says straight away, okay, I've got exactly for you, the Spanish bond. That's when the warning light comes on. You know,
Yeah.
it's not necessarily for anyone. It is. There are other situations. Sorry,
Matt. Sorry.
No, there's a few situations where we've seen which the bond definitely shouldn't be used. So a bond inside a pension, we've seen this time and again. Somebody may move their UK pension to a QOB, so they may establish what a QNOBs, and then they have the bond within the pension. That is madness. That's two separate products that they're amalgamating for one. And there's only one reason why an advisor will set up in that way, and it's because of what, Paul, you mentioned earlier, the commissions that they can be paid up front, because the bond will pay those commissions up front, the pension provider won't. So if anybody ever suggests to you out there, have the bond inside a pension, not only say no to that, say no to that advisor, because that is not good advice for the individual. The other times to not use a bond, again, Paul, you've covered this. The bond should be set up on a fee basis only. It shouldn't be set up on a commission. A commission basis is to disguise how much the advisor's to be paying. So it should always be on a fee basis where you're not locked in to the bond. Which takes me to the last one, that when you shouldn't use a bond is, and I've had this question before, I'm sure you have, Paul, as well, is for a short-term investment. And this is not just specifically to the bond, but I've had somebody come to me recently and they said, okay, the bank's not paying much in interest. We want somewhere to keep this money for 6 months to a year, and then we're going to use the money to buy a property. That doesn't make sense. You shouldn't be invested in investments in that period, be it a Spanish compliant bond or something else, because it's too short a period. Your investments can fluctuate, and there's no guarantee that the money is still there, which you need to buy the property. So it's a long-term investment is the Spanish compliant bond, and it's important to kind of bear that in mind as well, with the caveat that we would never tie someone in. So it's designed to be set up for a long-term But circumstances do change, and if there's a huge change in a year's time, and you say, look, this is what I intended, but the money needs to be returned, you need to be confident that you can access that money without paying huge penalties to unwind that. So yeah, they're the sort of scenarios where somebody should really kind of consider if that's right for them. Okay, so
I have a few questions for you, Matt.
Yeah, we have frequently asked questions. So Paul,
Okay,
please be gentle.
I'm going to try and put you on the spot with 3 quick questions.
Okay.
How long should you hold the Spanish bond for?
Okay, that leads on nicely to that actually, and I didn't specify that. So when establishing it, I kind of repeat what I said before. It's not a short-term investment. It needs to be a long-term investment. We're talking minimum 5-7 years and beyond for that. Anything kind of lower than that, then it may not be the right, because it's an investment. The assets will be invested in funds and equities, and the value does fluctuate. We've seen it the last couple of years. So you need to go into that with a long-term view.
Okay. A question that gets asked all the time, Matt, continuously. Before setting up the product, and very often, generally, whether there's a Spanish bond or anything else, with British expats, it's a question asked not just at the beginning, but at some point further down the line, they become a client and their circumstances change. So I think it would be valuable if you could answer this question. What happens if I return back to the UK? What happens if the client returns back to UK and they have a Spanish bond?
Okay.
What are the options?
That's a good one. And I think what I would say is we would always take that into account at the outset when we're doing the planning. And as you know, Paul, we come across some people who maybe say, I'm relocating for 10-15 years and then I'm planning to return. That's nice to know ahead, because we can plan in advance. But also we see many situations where somebody says, okay, I'm moving to Spain, this is my home for the rest of my life, and circumstances change. Maybe it will be a death of a spouse. Maybe you then have grandchildren who you want to spend more time with. Maybe there's medical issues and people want to return to the UK. So despite the fact that we always think that, okay, this is it, never returning to the UK, circumstances change. So we always take that into account. Now, specifically with the bond, the bond provider Utmost, they are able to convert this to a UK compliant bond, but it's a very complicated process. It needs to be what they call endorsed to make sure that it's not a simple case of, okay, I'm back in the UK now, let's convert it to a UK bond. There's kind of technical aspects that need to go through. So it is possible to continue with that bond in the UK, but you need to know that you're aligned with someone who knows what you're doing, does that properly, because if you don't, then there's certain kind of implications from a taxation point of view in the UK and Spain. So it is possible to do something when you return to the UK, but it's a complicated process that needs to be managed properly.
Okay, and one final question. Can the bond be held in joint names?
Okay, that's a much easier, much more gentle one. Thank you, Paul. And it can, yes. I think I mentioned very briefly at the start, the bond can be set in joint names, and it's something that we recommend that it's set up between spouses, and when the first passes away, the bond can continue in the name of the second spouse, which avoids certain problems. We talked about the probate. We talked about Spanish succession tax, which, as you know, depends on which kind of region you are in Spain. But yes, it can be set up in joint names, and it's something that in most instances, we would recommend.
Am I right in saying, because in the past I remember that they had to sign an additional document saying that it was based on UK law to bypass the Spanish bond, which is a Spanish product, saying that it was a joint and severally, owned, and that, but I remember distinctly there was a form just to enforce that the policy did not die with the death of the first policyholder. Is that still the case? Because
Exactly, it is. Yeah, it is. Yeah, which is again, it's important that the bond is set up properly, and you're not just on the the treadmill of they set up the bond, then the next person, let's do it properly. But yeah, it has to be set up in line with UK law, because there's certain the rules in Spain with regards to inheritance and to your assets are passed to. So the bond provider have a way of dealing with that and make sure that that's set up properly at the outset.
okay,
Good. Paul, revenge time.
yes,
So I'll ask you one quick question. Very
okay,
easy, but it would be a nice summary of what we spoke about today. So if you could give one piece of advice to anyone considering establishing a Spanish compliant bond, what would it be?
yeah. If I had to give one piece of advice, and the individual was in an office speaking to an IFA in Spain, and this is the first time they engage with them, and they're having a conversation, and the conversation ends with, "You need a Spanish bond," and that is the only option they put on the table. I would be very concerned about the advice that they're receiving. If they haven't considered more widely how to structure their tax and financial affairs to make them tax efficient, and if all roads lead to a Spanish bond, if that's the outcome of the conversation and they haven't even considered any other vehicle, then that should ring alarm bells, because it shows that they're not really advisors, right? They're just pushing one single product. So whilst this is about the Spanish bond, I repeat again, we're not in love with the product. We're in love with the outcome and ensuring we deliver the best outcome for our clients. So, I mean, quite ironic that for a Spanish bond webinar, I'm knocking down the product, and I'm not. All I'm saying is, if that is the outcome of a conversation with an IFA, I think as a prospect considering the Spanish bond, it should ring alarm bells. It could be that it's the right product, but equally it might not. And a financial advisor is there to give advice and to make sure that it's the right product for the client, right? And if
Yeah.
there's only one product to consider, how can that be independent, impartial advice?
Yeah. Yeah. There's a big difference between a financial advice and a salesman, which
Yeah,
is this case.
exactly.
Perfect. Well, yeah, we've reached the end of the webinar today. So thank you for those joining us live and those watching this recording. I'm pleased to say we've quizzed each other, Paul, but there's no questions for us. I say please, we welcome the questions. It would be nice, but there's no questions for us. But
Yeah.
yeah, go on,
Can
Paul.
I just promote something?
Yeah.
We've got we've got a podcast, yeah, the Money and Finance podcast for expats, yeah. And we really need, and I would say, please go into a YouTube channel, which is on the page that Matt is displaying. If you can, look at some of the podcasts we've done in the past, and webinars. And if you like what you see, please subscribe, like, and share with within your circle of friends and connections. That would be very good.
Yeah, no, absolutely. We're here to serve the expat community. So, we really appreciate that you helping us get our name out there. We're here to help. We do have one question that's come through actually, Paul. So I spoke too soon. So Laura, thank you for the question. So what assets is a very good question as well. What assets can be held in the bond? Can someone choose the funds they want? Some low cost ETFs? Are they limited to actively managed funds?
Well, they're not limited to actively managed funds, but they have to be UCITS funds, and you can't self-manage a Spanish bond. It has to be through an advisor. Whether the advisor then is prepared, because remember we are subject to a EU directive called MiFID, Market in Financial Instruments Directive, and that requires that the advice is given by the advisor in a correct manner and so on. If people are trying to do execution only, then there would have to be an execution only letter, but self-managing is not an option on a Spanish bond. You can either through the advisor, you can find you might be able to find discretionary fund manager. I think it's difficult as well, no, Matt?
I think it's difficult because they need to be
UCITS.
UCITS qualified.
Yeah,
That's
exactly
the issue. So there are a lot of UCITS funds out there, and I believe some ETFs are UCITS qualifying, but some are not. So it's important that the assets held within the bond are correct. Otherwise, it effectively breaks up the bond and or the benefits have gone. But again, managing the assets and giving advice on that is one of the many things we're here to help people with, and the discussions we can have with people further down the line. So wonderful. Thank you for that question, Laura. Thank you everyone else for joining us. We ask again, please visit our YouTube channel, Fiduciary Wealth Management, subscribe, like, share with your expat friends and family, and you're more than welcome to join us for our weekly podcast on every Wednesday, the Money and Finance for Expats podcast. But for now, we say thank you for joining us, and we'll speak to some of you soon.
Thank you, Matt. Thank you, everyone.
Thank you all.
Bye-bye.
Bye.